Are the Forex markets rigged? Stay tuned, we'll talk about that next. G'day traders, Stacey Burke from Stacey Burke Trading. Are the Forex markets rigged? Great question. Just down at the park with my dogs, just got done another great workout, had a bit of a run and a workout. It's a Friday afternoon and a little cool, a little windy, but sun's out in beautiful Perth and it's going to be a great weekend. Do I think the Forex markets are rigged? Well, this is a common question. I see a lot of stuff often in comments on videos and chat rooms and forums. I don't really spend a lot of time there, but often I'll read articles and at the bottom I'll tend to sift through comments and just get people's feedback to see where their headspace is at. And one of the most common things I see is that people often talk about stop running and brokers and the institutions running stops. Now I think personally, I always talk about longer time frames, hourly, daily charts. If you go back and go bar by bar and review, hundreds and hundreds of days or hours of back data, I think that you'll find that if you go back and look, especially if you're day trading on the hourly charts, London Open, Asia close, London Open, New York Open, London close, I don't see a lot of the stop running. I think you'll see stuff on major impact news events where you'll see spikes. And if you think that that's stop running, I think what you need to really understand is that often major orders will be withdrawn out of the market when there's uncertainty on the data. Now there's lots of theories that the big institutions know the numbers and the data before it comes out, and they're able to position themselves or remove orders to see where the general larger movement of the market's going to go before they get back in the market, and that it's that vacuum effect of drawing orders out of the market that creates that space where the market will pump to one side or the other, often because it is seeking liquidity. It's seeking liquidity, and liquidity occurs where there are orders. Now those orders may be on-stop orders to trigger new entries, and they may be stop orders to close out existing orders. They could be for profit, they could be for loss. But do I think that specifically they target stop running? No, I do not. I believe that on short time frames, they do. Again, the market is always seeking liquidity and volume. It is seeking orders, so it will keep moving where there's orders and where there's volume. Whether you call that stop running or not, no. I think that some of the broker platforms will spike orders because there is no central clearinghouse that you can go back to check the actual buy and sell orders and transactions like in futures markets. But in Forex, there is no central institution. It's not centralized. It occurs all over the world at different banks through two major carriers of that price information. But do I think that there's stop running? No, I don't. Now, there'll be lots of people who disagree with me, but on the longer term time frames, I really do not see that in existence. There are the occasions like the Trump election, Brexit, the European vote, where you'll see excessive ranges for the day, and it'll run both ends of maybe the previous day or the previous week. There's always going to be those events, but those are high impact times, and there is a lot of uncertainty. There's a lot of volume that goes into the market, and really until the market finds direction, you may see orders flow going in both directions. If you're on a 5-minute chart, I think you're going to see lots of volatility. If you're trading on thinly traded pairs, I think you'll see lots of volatility. I wouldn't necessarily call that stop running, because again, remember what the market's trying to do. It is seeking liquidity. It's always seeking to fill orders, whether it's seeking to fill profit taking, new orders, stop loss orders. All that it sees in its existence is that it's constantly filling orders, and there's new orders constantly coming into the market. Again, if you look at how the banks trade, often they are not necessarily trading for profit, but they are moving huge amount of client funds in and out, and there are huge amounts of trading capital going in and out where they're executing orders and then also trying to profit from the agreements that they've placed with clients at a pre-agreed price in terms of a currency exchange, and that's just global commerce. So If you go back and you back test your strategy on whatever time frame it is, I think the shorter the time frame, the more likelihood you're going to see short-term volatility high. The longer the time frame, I think if you start looking at average true ranges for weekly, monthly ranges, daily ranges, you'll see that there's less evidence of anything necessarily about stop running. Support and resistance, but no, I do not believe specifically on the longer time frames that there is stop running. I do believe that there's order execution and liquidity being filled. But short term, I think again you'll see spikes and fluctuations depending on the liquidity and volume of the currency pair traded. And again, if there's been any high news impact release events. So as always, traders, I talk about getting the 7-step daily routine for high performance traders. One of the things that we go through in that is accelerated learning, and that's going back bar by bar every single day and back testing your trading strategy and knowing exactly what to expect. And regardless of when there is a spike or whatever stop running or liquidity or major impact news, you've managed your downside, you've protected your loss, you've had the proper position sizing, and you've managed your trades appropriately. So, keep getting better. Trade smart, trade better, trade bigger, and live the dream. So have a great trading week. Get out and enjoy some sunshine. Get better at your trading, and may the markets go with you. Have a great week. Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.